The Australian housing market, the total value of the dwelling stock in Australia, just ticked over $10 trillion. So obviously it's pretty hard to wrap your head around a number like that. If we compare it to the value of the ASX, 2.6 trillion is the market cap of the Australian share market. The Australian housing market is worth 2.7 times the market cap of the Apple company. I think what's really impressive though is when we look at the gains. Compared to 7 years ago, we've essentially doubled the total value of the dwelling stock. Some of that is because we've been building additional dwellings. We've added well over 1 million new houses in Australia over that period. We've also been doing a lot in terms of upgrading. The writing's on the wall as far as key drivers of the housing market go. Affordability is very stretched in the Sydney and Melbourne market, are becoming stretched in other markets. We have a higher inflation rate. We've seen a lift in inflation over the course of 2021. Underlying inflation now running at 2.6 is on the RBA's target band already. The labour market's tight. We think by the middle of the year the RBA will have met its inflation and unemployment rate targets, and we'll be pretty certain that it's going to meet its wage growth target. So we think the tightening cycle's on its way, most likely to begin in August, with rate increases carrying through most of 2023 and into 2024. So that spells a very different period for the housing market. Obviously we've had ultra low interest rates over the last couple of years, have been a big driver of these big gains, particularly in prices. That starts to unwind. Doesn't mean we go headlong into a nasty correction, but it is looking like a correction phase. That means total values will probably level out, but I think the days of $500 billion gains in the dwelling stock are behind us now. We'll be levelling out, most likely some correction.